Question number 2 is all about, they're all different or independent. It says they're all independent questions and not related. So make sure you pay attention to that. Question A. So we'll work through it A first, then B, then C, then D. All right, a motor car manufacturer is being sued by a rival for infringement of a patent rights. A court case has just commenced, but a decision is not expected until after the end of the reporting period. Lawyers representing the business are unsure if the court will find in favour of the business and the extent of the liability in the ruling. Does the motor car manufacturer need to record a liability for the lawsuit? Give your reasons. Tell me, do they? Do we need to record a liability? Yep, no. If it's greater than 50%. Wow, what's the probability is greater than 50%? Okay, that's pretty much working off the definition. So, but if we were unsure, would you say that was more than 50% or less than 50%?
We don't know what the outcome is.
Okay, so what we're looking at is we're looking at the definition of a liability. So we've got to have an obligation. We've got to have an outflow of resources. And we have to have a past event. So those are my 3, in brief, parts of a definition of an asset, liability. I also got to be able to measure it, measure reliably, and what's the last bit? And it's got to be probable that it will occur. So now, those 5 criteria have to exist if we are to record a liability in our accounts. So that means underneath my liabilities in my balance sheet I will have lawsuit and all this. So let's see if we can tick this off. Is there a current obligation? Do we owe someone something now? No. Will there be an outflow of resources that embody economic benefit? We are unsure, so there's a question mark there. Is there a past event? Well, there's that patent right, so yeah, we can say there's a past event. Can we measure the value reliably? Well, we don't know the extent of the liability here, so no, we can't. And is it probable? Well, the lawyers said they're unsure, so there's another question mark here. So in brief, do we need to recognise a liability? No. No, you can't see that because it's just, there we go, no. Now that'll get you 1 mark. Okay. No, but what we need to do is we need to record a contingent liability. In the notes. That there is a potential liability. So we've got a lawsuit that's pending an outcome. So do we need to record it? No, but we need to make a note of it. So it's sort of like a yes and a no. It's not in our accounts, but it's in our notes. So you need to tell me that's in the notes. Okay? That's question A taken care of. And there's, what's that? That's 3 marks. So you would have got a mark for that. You would have gone, okay, there's that and there's a potential outcome. So there's a possibility.
You have to say that there's a contingent liability, or
Yep.
you just say you have to record no?
If you put no, you'll get 1 mark out of 3. If you tell me why. So what you want to be able to do is you want to tell me that there is a contingent liability and the contingency is this law case. If it goes in our favour, we don't have a liability, but if it goes against us, we do have a liability. And usually lawsuits will change people's decisions about investment, so they need to be informed about this. So that's what it comes down to. Good
The
question.
word contingent liability.
Yeah, so really yeah, you're right. I wanted to see these words contingent liability here. Yep. Okay, is everyone okay with A? All right, let's move on to B. B is on the 1st of December 2014, Faker Limited borrows $80,000 from Upways Bank, signing a 6-month 12% interest-bearing note. And what we need to do is we need to prepare the journal entries for Faker Limited to record the issue of the note in 2014, the balance day adjustments to accrual of the interest for the year ended 31st of May, and then the payment of the note at maturity. So there's 3 journal entries that we need to do. So let's go. B. So I've got my normal journal would take a date, description, my debit, and my credit. Okay, so on the 1st of December, I'm going to recognise that I've got this note. Now, when I get a note, it means I've got money from the bank. So what increases is my cash. And my cash is an asset. Normal balance for an asset is debit, so that's going to increase by 80,000. And what's also going to come in is what we call a note payable, which is a liability. And when normal balance for liability is a credit, so when I increase a liability, it's a credit. And I'll just draw a little line, say I've finished that journal. The next thing we've done, so we've done the first bit, I want to do the balance day adjustments to the accrual of interest. So now my interest, I need to make a calculation on this. And I'm just going to make this on the side here. It says that my note is 80,000 and it's a 12-month, 6-month 12%. So interest. So if I do 80,000 times 12%, can you see that there? And times 6/12, which being 6 months. What I get is 4,800. Thanks for the maths. Thank you. So that's my calculation there. So that's my little note. All right, so we're on the 31st of the 5th. And what I need to do is I've got an interest expense. I've got interest expense of 4,800, and I've got interest payable of 4,800. That's that one finished. So I can tick off 2. And now we just need to make the payment of the note, okay, which is also on the 31st of May. Note on maturity, issue of the note on the 1st of December, so it will mature on the 1st of June or the 31st of May. So on the 1st of the 6th, when I pay my note, what I'm going to do is reverse this note payable. So that becomes my debit of 80,000. And I'm going to be reversing this interest payable of 4,800 because they're no longer going to be liabilities to me. And then what's actually going to happen is my cash is going to reduce as well. And that'll be for 84,800. And that then records my payment of my note. Anyone got any questions on that?
Do you lose marks with different names?
No, not really. As long as you didn't call it loan payable, or you didn't call it, deposits. I don't know what else you could call it really. If you use the wording from here, yeah. Really, what I'm looking for is I'm looking for those. Okay, so you got a payable there. If you just put note, that's fine. If you just put interest, okay, then I'm going to question that because there's an interest expense and interest payable. I want to make sure you know the difference between the two. So, and then just these. So you can pretty much, if you use the wording from here, you'll be pretty fine.